Today, Bitcoin slips while Ether is on the rise. Ben Gagnon of Bitfarms sits down with us at Bitcoin 2025 to discuss the Bitcoin miners' priority shift to HPC and AI. And Paolo Ardoino of Tether discusses the company's global investments and hopes for stablecoin legislation in the US from the conference. Welcome to CNBC's Crypto World. I'm Katie Tarasov. Cryptocurrencies are mixed this morning, with Bitcoin falling more than 1% in the past 24 hours. At noon Eastern, it traded at the $105,000 level. Ether, meanwhile, rising more than 1.5% and trading just below $2,700. XRP was in the red, though, falling to $225. Okay, let's talk about the top stories. President Trump's Truth Social platform is now one step closer to having a Bitcoin ETF available to everyday investors. NYSE Arca, the all-electronic division of the New York Stock Exchange that handles most ETF trading, filed yesterday to list a Bitcoin fund linked to the president's media company. The filing follows a broader partnership between Trump Media and Crypto.com to launch crypto products, and it's just the latest sign of Trump's expanding push into digital assets. Last week, Trump Media unveiled a $2.5 billion treasury plan to allow them to buy cryptocurrencies. Next, Donald Trump Jr. is also putting some distance between himself and the Trump meme coin. While speaking with CNBC's Squawk Box yesterday, Trump Jr. said he had nothing to do with the token and said he was more focused on USD1, the stablecoin linked to the family, and his Bitcoin mining venture, American Bitcoin. Now, he also addressed widespread criticism of the family's crypto projects, like concerns it could lead to influence over a sitting president. Trump Jr. didn't dispute the potential for abuse, but said the anonymity of blockchain could mitigate some of the damage. Last, Don Jr.'s brother, Eric Trump, is also distancing himself from another crypto project that uses the Trump name. NFT marketplace Magic Eden announced plans to launch a Trump-branded crypto wallet in partnership with the team behind the Trump meme token. The company said the wallet would feature the president's likeness and allow the trading of assets beyond just his meme coin, including Bitcoin. But after the partnership was announced, Eric Trump took to X to say he runs the Trump Organization and knows nothing about the project. CNBC reached out to Magic Eden to respond to Eric Trump's denial, and they pointed us to the Trump meme X account, which reposted Magic Eden's announcement. We also reached out to the Trump token team about the terms of the deal, but didn't hear back. As we wrap our coverage of Bitcoin 2025 in Las Vegas, Crypto World's Talia Kaplan sat down with Bitfarms CEO Ben Gagnon at the conference to discuss the Bitcoin miners' goal of expanding its U.S. footprint and the company's pivot to AI following last year's halving event.
2 months ago, Bitfarms completed its acquisition of Stronghold Digital Mining with the goal of strengthening U.S. exposure. You spoke with us back then when the deal was complete, and you called the deal transformational. You said that it opens the door for Bitfarms to do other things other than Bitcoin mining, things like HPC and focusing on that. So can you talk to me about what has changed for Bitfarms since this deal was complete? So the past 2 months, I would say.
Yeah, that's right. This deal was a really, really big shift for us as a company. I think if somebody thinks about Bitfarms, they probably think of us as the Canadian or the international Bitcoin miner. But what we really wanted to focus on was the opportunities in the United States specifically. And so over the last couple of months, we not only divested a lot of our Latin American megawatts, but we also acquired what we believe are some of the best opportunities in the United States in rural Pennsylvania. So we acquired 2 different power plants in rural Pennsylvania, allowing us to vertically integrate and control our own power. But we also got this massive pipeline for future development. So for the next couple of years, our growth is 100% focused on the United States, and was really enabled by those transactions.
And when you spoke with us a couple of months ago when that acquisition was in fact complete, you mentioned that last year 6% of your operations were in the US, but that number jumped to 66% because of this acquisition and other deals in the mix. So I'm curious, what are some of those other deals? Is there anything else in the works right now here in the US as it relates to strengthening US exposure?
So we did 3 different sites in Pennsylvania, 2 with Stronghold and 1 with just more of an organic M&A opportunity for a site called Sharon, which is about 30 minutes away from one of our Stronghold locations. Beyond that, the pipeline is really all these different power applications that they put in with those 2 power plants. So it's not just the power that's already there, it's not just the power that we could generate, but it's the power that we can tap into the grid over the next 12, 24, and 36 months. that really changed that power portfolio dynamic. When you're looking at, really what is the problem that Bitfarms is trying to solve? It's this energy bottleneck. You hear a lot about HPC and AI, you hear a lot about the NVIDIA chips, but what you don't hear as much about is all the power and the infrastructure that's necessary to operate them and make them run. So not only do we have the opportunity to really focus on the development now, but we now have a multi-year pipeline to really expand that out at quite a large scale.
Now, a lot of Bitcoin miners, including Bitfarms, as we noted earlier, are turning to AI as a source of revenue to diversify revenue streams following last year's Bitcoin halving event, which significantly reduced the rewards for blocks and made Bitcoin less profitable. So where does that stand right now? Is the priority on Bitcoin mining still, or has the priority shifted to AI?
So the priority is really now entirely on HPC and the AI opportunity. And there's a few reasons for that. When you're looking at how do you actually create long-term value for shareholders as a public Bitcoin mining company, historically it's been about growing your actual Bitcoin mining operations. But our industry trades at roughly a 3 to 5 times multiple. And even if we double our Bitcoin mining business, we're not going to get beyond the 3 to 5 times multiple. For us as a business, we're really trying to focus on how we create that long-term value for shareholders, and data centers trade at roughly a 20 to 30 times multiple. So instead of investing all this money into energy infrastructure for Bitcoin mining, we can actually convert over those energy assets that are traded at a 3 to 5 times multiple, convert them off into HPC and AI. We can hopefully unlock a big multiple expansion to 20 to 30. And that's going to give investors really, really good opportunity to gain exposure to this really exciting HPC and AI industry, which we're really just starting to scratch the surface of.
So 2 weeks ago, Bitfarms reported Q1 earnings, and I want to point to some of the highlights. Revenue jumped more than 30% year over year, and the company reported a net loss of $36 million compared to $6 million in Q1 of last year. What do you attribute that net loss to? Is it because of the completion of that acquisition of Stronghold Digital Mining? Was that a factor in the mix?
The biggest factor here is some changes that we had to do in terms of writing down some assets. So we have a lot of assets in Argentina specifically, and that represented the biggest amount of that net income loss. But really, I think the opportunity here is not what happens on a quarterly basis, but what's going to happen in terms of our growth rolling forward. We're in a growth industry, we're a growth company, and when we're looking at how we're actually driving value for shareholders, it's not focusing on the growth that we've done for the last few years in Latin America. It's on that growth that I spoke about earlier on the United States that's going to enable us to get higher revenues, bigger margins, and unlock that multiple expansion that we're hoping to achieve with HPC and AI.
Your earnings report also reveals that Bitfarms sold 428 Bitcoin at an average price of more than $87,000 for total proceeds of $37 million in Q1 2025. Of course, as we mentioned earlier, we just saw Bitcoin hit a new all-time high, just under $112,000. So in hindsight, do you wish you could have waited? Could you have waited? What was behind that decision?
So we're a company that always believes that in order to pay for our company, we need to pay for it out of operating revenues. So we always sell Bitcoin on a monthly basis in order to pay for our electricity bills. It's not cheap to mine Bitcoin. We've got a lot of electricity to pay for. We've got a lot of staff to pay for. And so we'd rather pay for that out of our actual revenues as opposed to trying to issue equity or trying to raise money to fund operations. You can always look backwards on Bitcoin and say, shoulda, coulda, woulda, right? But really, I think the opportunity looking forward is the fact that we now have all of this infrastructure in place to get that great upside exposure to rising Bitcoin prices. We have a tremendous amount of Bitcoin on our balance sheet, and we've got this amazing opportunity to invest all of this money into the HPC side. And really, that should be the focus. And when you're looking at how do you manage our Bitcoin on a daily basis, we've got a very sophisticated treasury management strategy. So we're always trying to gain an extra leg up on the Bitcoin sales, on the Bitcoin programs. And unfortunately, no one has a crystal ball. If I had one, we probably wouldn't be running a business today. But when you really want to manage your business prudently, you want to manage your capital, you've got to always take a little bit of chips off the table. And that's exactly what we did in April.
Now, I read that public miners actually sold more Bitcoin than they mined last month. And that was, of course, ahead of last week's price surge. And ultimately, they hit their highest sell-off ratio since 2022. Your earnings report reveals that Bitfarms is, in fact, in that camp, selling more Bitcoin than was mined. And I'm wondering, what do you think are some of the factors forcing Bitcoin miners to cash in a record number of their BTC reserves?
I think really it's more of these companies are starting to switch over to the same kind of operating model that Bitfarms has been using for years. And it's, instead of raising money to fund your business, you should use a portion of your revenues to fund your business. So this is something that Bitfarms has been doing for a long time. I think the industry is starting to catch up and also adopt this strategy. And then the second part of this is that, when we're looking to grow and we're looking to fund our business rolling forward, the cheapest cost of capital is our own revenues. It's our own cash on hand. It's way cheaper than going out and raising debt or issuing equity. And so that always needs to be a part of the mix when you're trying to grow the company creatively.
So this week, a class action securities lawsuit was filed against Bitfarms, alleging that some financial statements were inaccurate and therefore misleading. The lawsuit seeks to recover losses of shareholders who were negatively impacted by alleged securities fraud between March 21st, 2023 and December 9th of last year. What's your response to that class action lawsuit?
Well, it's company policy not to comment on ongoing litigation. We're going to defend ourselves vigorously for this. And, really that's all I can say at this time.
Okay, also at Bitcoin 2025, Crypto World's Mackenzie Sigalos spoke to Paolo Ardoino of Tether about the stablecoin giant's investments outside of USDT, and of course, his thoughts on attempts to regulate stablecoins in the United States.
Tether's among the most profitable companies in the world by employee. And before we get into the stablecoin strategy and some of the work that you're doing, I'm very interested in some of the investments that you've been making, including into a Brazilian dairy company. So talk to me about your investments in AI and neuroscience and the fact that you're long dairy, long milk.
All right, so first of all, thank you for having me. Looked from the outside, it might seem like, oh, these guys are doing random things. But actually,
I think when you have a lot of capital, you figure out smart ways to invest it, and that's why I want to know what connects the dots.
Yes, so having $20 billion of profits generated in the last 2.5 years, you have to wonder and start having a very precise plan on how to invest them. So we get hundreds of deals almost per day on our table, and so we have to be very selective. So a portion of our investments, by the way, these investments are outside the reserves, so the stable coins, just to clarify, right? Our portfolio investments, a portion of it goes towards long-term safe investments. Land and agriculture is long-term. Tether is known for being the creator and the owner of the biggest stablecoin in the world, right? USDT. Stablecoin is something that is a tool that brings stability to people, to communities, to countries. Because we bring stability to countries that have a very weak national currency, like the Argentinian peso or the Turkish lira. So stability is in our core. There is nothing more stable and more necessary in the long term for the stability of humanity than land and agriculture. Humanity will need always land, will need always agriculture, and good agriculture to survive and to prosper. So that's why a portion of our portfolio is actually on this land business. Then, of course, we have the more new technology type of investments like artificial intelligence or biotech. I love them because I'm a nerd at my core. So we invested in Northern Data. We have the majority of Northern Data. This is probably the biggest independent AI infrastructure provider in the world. When I say independent, means not Google, not Microsoft, not Amazon. So they have 24,000 GPUs, and we plan at Tether to leverage those to start creating our models in the future. Then we invest in other things like Rumble. Rumble is this video platform, very good one, very competitive against YouTube, for example. And they are doing wonders. They have access to 60, 70 million users.
It's such a robust portfolio, but your core business, you control more than 60% of the stablecoin market. And we've got the Genius Act, which was making progress through Capitol Hill, hit a roadblock with Senate Democrats. You've got David Sachs from the White House saying that he's still very optimistic that this is going to pass. My question to you is what the competitive landscape looks like once we have hard and fast rules. The assumption is that we're going to see a flood of new stablecoins enter the market. In the last few years, we've seen that too. PayPal issued PYUSD. That's still below a $1 billion market cap. So people have struggled to compete with Tether. USDC is, a somewhat distant second. So how are you feeling about how competition changes in the wake of this kind of policy?
I love competition. There isn't, but I think that competition is going to compete with our second competitor, Circle, and not with us. The reason is that all the companies that are announcing to do stablecoins are coming from the traditional financial system. The success of USDT is derived from the fact that we understood that in this world, there are 3 billion people that don't have access to bank accounts. They are not bad people. They are very good people. Simply, they are too poor of being of interest of the banks. In order to be of interest of a bank, you need to generate at least $150 per year in fees, in commissions for the bank. But if you live in Haiti, where the average daily salary is $1.34, or if you live in Africa, where the average monthly salary is $80, you cannot give $150 to a bank in a year. So all the traditional financial firms will create stablecoins that will be offered to their existing customers. We take care of 3 billion people that, by the way, these 3 billion people are considered a niche by the banking system. Many of our competitors say, oh, Tether is serving this niche of unbanked. Half of the population of the world should not be called a niche. They are half of the population of the world. So we build adoption with the boots on the ground. We build kiosks in Africa. By 2030, we are going to have 100,000 kiosks in Africa providing electricity through solar panels to the people in smaller villages in Africa. We are already delivering stablecoin education and Bitcoin education. We have hundreds of thousands of touch points in Central South America with bodegas.
And that's something that I've wondered about, because Tether has been so big on this point of sale adoption, being able to pay in person with your phone, using your stablecoins that you have on your crypto wallet. But so much of the world still is a cash economy. So yes, stablecoins are hugely important in terms of being a bank that you wouldn't otherwise have access to, transfer of value, safe storage with respect to economies where there's spiraling inflation. But do people want to pay in crypto at the point of sale?
More and more, yes. So we have around 420 million users now. And our user base is growing by 30 million new wallets per quarter, almost like if we were at Facebook in the good old times. So this proves that money is the best social network, because the growth that we are having is parabolic. And actually, more and more people, even in the poorest countries, have access to cheap smartphones, but still smartphones can run wallets. And so by the word of mouth, our user base is growing dramatically. And all our competitors are focusing on institutions, all institutions. We build millions of touch points with the real world, with the people, with boots on the ground. We start from the streets.
Yeah, as you've scaled Tether to what it is today, have you ever had a desire to get out of the Cayman Islands? Because there are certain tax advantages, but at the end of the day, there are in Dubai as well, and it has a very established framework that's friendly to the crypto industry. And the Caymans is actually pretty complicated to move money through, and I imagine it's pretty cumbersome. So is it something that you've contemplated?
So right now, actually, we are incorporated. We moved from BVI to El Salvador. So we are moved the incorporation there. El Salvador is, in this moment, the only country that have a proper, intelligent stablecoin, very thorough stablecoin regulation. Europe has a very bad stablecoin regulations called MiCA. They require stablecoin issuers to keep 60% of their reserves in uninsured cash deposits. Look at what happened to our major competitor in 2023 with Silicon Valley Bank. They had $3 billion in uninsured cash deposits in Silicon Valley Bank. Silicon Valley Bank blew up, and our competitor almost died. Then FDIC stepped in and saved the bank, so the stablecoin was saved. But you should keep treasury bills. You should not keep uninsured cash deposits. MiCA license requires you to keep an insured cash deposit. So we decided to not apply to that because it's a bad license. El Salvador is the only country that in this moment has the best, most thorough, most safe regulatory regime. Now the US are going to catch up and actually will have a very good regime as well. But until then, we can play with the cards that we have in our own hand.
I was talking to Bo Hines earlier, who heads up the White House's Digital Asset Council, and he pointed to Tether as an example of, I think last year you were the 7th biggest buyer of US Treasuries.
Yes.
You're pretty high up on the list in terms of all-time holdings, I think 19th. To go to this larger narrative of, once you get the Genius Act or another stablecoin bill passed into law in the US, you'll see trillions of dollars of demand for US Treasuries virtually overnight. How do you find the Trump administration to be, and how have your interactions been either with the president himself or members of this new task force that he's put together?
I never had the opportunity to meet the president, but I've been collaborating and discussing with the administration and in general the lawmakers on the Hill a lot about stablecoins, being our company the mother of all the stablecoins. The discussion were very positive, a good change from the previous administration, I must say.
Do you have any pause around the Genius Act, or do you support other legislation that's making its way through the US?
I think the Genius Act is very sensible and is very thorough, but it's important to have proper rules for stablecoins because they are the most powerful implementation of blockchain technology ever built.
One last thing before we go, we're keeping an eye on the House Financial Services Committee, which held a hearing focused on regulating digital assets through a market structure bill. We'll have more on that hearing in tomorrow's show, and we'll see you then.